Good morning and welcome to the crypto simulation. I am the Gaussian Snake and I'm going to talk to you about Bitcoin price predictions and look at some predictions that have been floating around and see if they're reasonable and if we should seriously consider them. Also, while you're here, why not join my Snake Pit Telegram group for daily technical analysis updates about various projects, including Bitcoin, stock market analysis, and so much more. We've got about 220 people there. Feel free to join us at the Snek Pit. It's SNEK. I also have a free portfolio management tool that I'm happy to share with you. Just mention it when you get there, and one of us will hook you up with it. And not financial advice. Do your own research for everything in this video. Just my opinions on Bitcoin, and you are free to agree or disagree with them. So I want to acknowledge something in, my Telegram group. I've been talking about how I felt like Bitcoin was going to break down over here on the daily, which it did, but I felt like it was going to have a little moment similar to what happened in August and September, where the Gaussian channel turned red. Now, the Gaussian channel is fat and concave down, and we're not out of the woods yet. We still have yet to put in a higher high. Everything so far, is pointing to potentially a lower high. But up to this point, my prediction has been incorrect, and we have not gotten down to the $45,000 to $50,000 region. Although we are not out of the woods yet, there is no guarantee that we don't come back and back test the channel. Okay, so just be aware of that. That's just something to consider. And the other thing is looking at Bitcoin dominance. I reiterate that Bitcoin dominance does still look relatively strong. It's above its Gunnar EMAs. You can see those in green and orange, or green and red, and the orange line is the weighted logarithmic Bollinger Band median line. Gaussian channel is green, concave up for the most part. Sometimes I think I'm seeing this inflect, and it's always hard to tell just looking at it. I feel like I see an inflection, but maybe it's not there. I don't know. I feel like I see it, but that's besides the point. What's going to cause dominance to break out here? Bitcoin uptrend or a Bitcoin downtrend? Now, the truth is either one could. For an uptrend to cause dominance to break out, it would have to be parabolic. But most likely a downtrend would be what would cause dominance to increase in a material way. Now, I've said that I think dominance probably won't make it past 58%, but truthfully, there's a region up here around 66%. I doubt it makes it up there. I really do. I feel like dominance is in a descending pattern here with, lower highs and higher lows, but anything's possible. So my opinion is dominance will probably break down sooner than it will break out, but I do think it has gas in the tank, certainly for another move higher. Yeah, Bitcoin on the weekly is not out of the woods yet. We've had a pretty resilient, I didn't ignore this. Like when we dropped below the green Gunnar EMA, I thought we'd see follow through, but we actually held the weighted logarithmic Bollinger Band median line, which we did over here. And that's the second time we're doing it. So that's pretty significant, on the back of that, on the back of economic news on the back of, news about Iran and Israel that wasn't good. We saw a shakeout, and we had another shakeout the week before too. And the reason I'm calling these shakeouts is those down wicks were bought up real fast. That's happened before. It happened over here. All the Bitcoin's corrections in this bull market have been like that, where people just rush in and buy up the Bitcoin as soon as it dumps, and altcoins just get absolutely wrecked during that time. So, what is the most likely path forward for Bitcoin? And I want to say, it's not out of the woods yet. It's not impossible for this to still see a visit down in the 45 to 50K zone. I would say it's becoming less likely, okay, and becoming more likely that my prediction was wrong. But let's wait and see what happens before, we call it off, because it could be a slow bleed. It could come down here. There could be more weakness, okay? Let's see what some of the indicators have to say. And then I want to spend some time addressing some price predictions that I've heard people talk about and see if they seem reasonable or not. Weekly ADX and DI. Trend strength is still quite strong. You can see that we peaked out around 75.18 on the weekly. We are trending down, although in a concave up sort of way. So that indicates to me that any moves that we get by the ADX or DI, any Bitcoin price moves, are going to be quite volatile. So Are we going to see another kink upwards of bullish price action, or are we going to contract down towards some more bearish price action? You can't tell from looking at this chart. But what I can tell you is that any move we get is going to be fairly strong, because the directional index, I always get these mixed up. The average directional index is so high. When you're at a trend strength of near 70, that's not crabby behavior. That is strong move behavior. The Snabble RSI is quickly becoming one of my favorite indicators. It's like an exaggerated relative strength index that uses exponential data. We have not seen it come anywhere near the oversold region since August and September, and I just keep waiting. I'm like, God, when is this correction going to come? Like, I feel like we're due for it. I mean, you can see that the Snabble RSI median line or average line is starting to trend down. We did have a bullish kink here. We tapped, it looks like the 60 level, and held it as support. But does this look like convincing support to you? It really doesn't to me. So just looking at this price chart on a weekly time frame, I feel like we're due some red weeks, and maybe those start to come towards the end of this month, which we're already at. And if it doesn't come then, maybe in May. Maybe I still feel like May is not going to be very kind based on what I'm seeing here with this particular indicator. I could be wrong, and who knows, maybe we begin in a third leg up. But you can see, like, usually when you get up to these like red regions, you get a nice correction, and you tend to make it down to the lower green. So that still would fit in line with my price prediction of 45 to 50K. And look, I'm not trying to be prideful about it, because it actually does not benefit my portfolio at all if I'm right about this. It would actually harm my portfolio. But I just have to go with the data that I see, and what it's telling me is that downside potential is quite strong still. It's been reduced since we hit 60, and we bounced here, and we bounced here in the past. This is an area where there's been a lot of bounces on the way up. Even we bounced, and then we went up way high into December and January, came down, bounced here again. So is this gonna be like an extended bounce that takes us to the red line? It could. Or do we just roll over here and maybe test the 50 region and then eventually get down here, which would be a really great accumulation zone, not only for Bitcoin but for Ethereum and altcoins too. So, but nothing's guaranteed. Let's look at some more indicators. One of my absolute favorite indicators, this price momentum indicator, as you can see, hit a major top in January of 2024. And this is not something that happens often in Bitcoin's history. You have to go all the way back to 2020, late 2020, early 2021 to find Bitcoin's price momentum at those levels. And like you can see, we hit it in January, and then we back tested, or we tried to hit it again in March. Didn't quite happen. And you're thinking, well, didn't we put in a higher high in March than we did in December or whatever? Memory's fading. Well, I can look at the price chart, right? And you're right, we did put in a higher high. But what happens anytime this is going up, price will be moving up. But the ROI move, the return on investment move, is the greatest right here. Okay, and you can see we've been kind of coming down, and this channel has turned red now. It's turned red for the first time since June of 2023, and it was red from June all the way to October. And yeah, it turned red here in May and then went green again for a month. So there's no guarantee that this red extends out further, but you can see we're back testing this red line, and we have yet to go over it. That means downside price action is more likely than upside price action. I just have to call it like it is. Okay. And we could see a prolonged cool off that lasts several months, and that would not surprise me at all if that happened. We could see this kind of roll over. So, yeah, congratulations. We held the line on the first attempt. Are we about to go parabolic? We could, right? This could come back up here and double test it. Has that happened before? We pretty much rode it right here all throughout, like for 2 months. And here we are in 2019. We rode it for 2 months. We tapped it in December 17. We tapped it in January 17. We almost tapped it in June of 2016. We tapped it in November 2013. February through April, we were riding it. So I guess the answer to the question is yes, we could put in another top. We could rise to the very top of the price momentum channel. It's just not likely. that we do, right? Because it looks like we kind of were riding the top of this from December to January, and we don't usually see us ride the top of it in that quick of succession. Um, so we're not guaranteed that this comes all the way down here into like really deep value territory. It certainly could. Last time it was down there was July of 2022. And that's usually, bottom of a bear market kind of situation. So it's possible this just trends down very slowly too, right? And price just kind of chops around it. So, but generally speaking, when you get below the red, you tend to stay below it for a little while. So that is a point for the bears. Now the oscillator volume profile money flow index trendoscope is showing a little bit of bullish divergence, but on a way down, interestingly, oversold is right here now at this 48.97 level. So this is at a big jump. This is kind of, to me, a point for the bulls. Now, this kink here doesn't convince me that we've started a bullish trend. I still think, like I've been saying, further downside is probably coming. But generally with the oversold regions, now again, this can staircase down too. So before I get carried away and call it a point for the bulls, we do have to consider that something like this can happen where it just staircases its way down. Generally it does that in bear markets, but it could happen, right? So I don't know. I don't know what's going to happen here. Like, this is technically oversold if we breach it, and we could just come right back up. Let's look at things in past history. When those lines are elevated, sometimes you can staircase your way down. So I don't really think that we can say a whole lot from this. It's just we tend to go from oversold to overbought. And that's kind of like this line going up here. So maybe we're heading towards some kind of like oversold before we head back up to overbought later in the year. Or are we about to just kink back off, and go back to overbought? I think heading down is more likely than up. I'll give a slight edge. You know what? No, I think the bears win this one too, because this is not much of a convincing divergence at the moment. It could turn into one, but I don't know. I'm thinking like this probably comes down again. That's just my intuition. So yeah, maybe a slight advantage to the bears actually, only because this orange line can kind of staircase down. I don't know about you, but this stochastic oscillator looks like it's ready to fall off a cliff. This is a point for the bears for sure. Now, we can spend quite a bit of time at these elevated levels, as you can see from January of 2023 to July of 2023. We stayed above like 40 something, and then we dropped all the way down to here. And then you look at your bear markets, not surprising. But yeah, during bull markets, we can be elevated for quite some time. You can see February 2020, we had a nice drop in March. June 2020, a little drop. August, we just kind of stayed at these upper levels for a while and then really went down into a summer lull. Came back up, got our November high, and the bear market started. So, like if you turn in terms of length, it really seems like we're pretty far into our bull market. Like you look at your last bull market, you had your 2019 run, which was kind of an anomaly, but you don't spend you can't be up here forever, and we've already spent like quite a bit of time. Do I think the bull market's over? No. But I think a lot of it has already taken place. Now, you could argue, well, what if we're in some situation like this, 2015 through 2017? What if we're like here? And you could be right. Maybe we are. But I seem to remember us being higher up than that, right? We were all the way up at levels of 90 on the stochastic oscillator. It took a while to get to those levels. Like, you really climbed your way up and barely breached 83, got to around 85, but you didn't really start breaching those higher levels in the 90s until December of 2016, at which point a year was left in the bull market. So what if we have we could have a year left, we could have less than a year. The point is, it's not going to stay up here forever, but as long as we're in a bull market, I feel like, it's more likely to stay in the upper region than it is to really spend too much time in the lower region. So I would say it is probably a point for the bears in the short term, but a point for the bulls in the longer term, because, and all my bear stuff is really short term. Let me be clear about that, okay? So my bear talk is short term. I do not think Bitcoin's going into a bear market. I'm just talking about a correction. That's it, a cool off. And I think this indicator looks like it, this could be the cool off that it got. Now it heads back up. That's possible. It's just the odds are with the orange line heading down, Now it looks like the green is wanting to cross here, so that is a it is a good sign. But does it get rejected and just start falling, or what? We'll have to only time will tell exactly what's going to happen. This kind of cross usually is bullish, as you can see here and here. So I mean, I guess you can interpret it as a point for the bulls. Well, to me, it looks kind of neutral because we're still pretty high up, but that hasn't really been much of an issue in the past. As you can see, we can kink our way right back up into another run. So I guess we'll just call it neutral. There's absolutely nothing in the bull bear power trend that makes me feel like things are about to get real bearish. All we can see is there's been a decline in the bulls being in charge. That's all, just a decline in it. We had a really steep decline in January, right? And you'd have to go all the way back to September, the August-September timeframe to find like a more neutral zone where the average had actually dipped down. But we've been at these elevated levels. It does look like we're putting in a series of lower highs. However, what I am spotting and kind of wondering about, and I'm going to need to draw it, is this level in here is a technical higher high. So could this be a trend reversal? You see we had lower high, lower high, lower high, and now we have higher high. So we'll have to keep an eye on that. This is probably a point for the bulls, I think. Although notice the trend moving average has not put in a higher high yet, so we should keep an eye on that. But the bulls are still very much in charge, so we got to just call it what it is. It's a point for the bulls. Bitcoin transaction fees have really fallen off a cliff. And usually this happens during slowdown periods. So that's something we should keep an eye on. I think transaction fees have a slightly different meaning this time around than maybe in previous cycles with ordinals and runes and all that going on, but it's still pretty significant that we peaked up here in December and we haven't been anywhere near that high since. So MACD does look a little bit bearish. You've got your signal line starting to go concave down. You've got your difference between the two moving averages sort of rolling over here. I think the 26 week and the 12 week. So it could just be the case that we get a touch point and then go right back up again and get another wave of dark greens. Well, in previous bull markets, unfortunately, we have to expand. I mean, I could try a log scale. That looks horrible. Okay, yeah, let's not do that. No, I don't really want to zoom out and zoom into that. But MACD, can't really predict what's coming next, but it can, we can look at another MACD and see kind of what it tells us, like something a little more dynamic. So the Gaussian filter MACD right now is in a trigger cell on the weekly. When you're heading down like this, parallel channels going down, that's a trigger cell indicating there's more weakness present than there is strength. But what if this just puts in a higher low? See, we can't know that in advance. This could be the stopping point right here. We don't have to trigger a short signal. Last short signal was triggered in August. We could just keep going up. And this is another one of those indicators where you can see you can go up for a while. Like, I mean, look at 2017. It was just a grind right to the very top, and we haven't even gotten, anywhere near that. Because this gets bigger and bigger every cycle, right? Usually. So, like MACD, as you can tell, like when it's on a linear scale, which it kind of has to be, you can't just look at this level and say, oh, we're maxed out for the cycle. No, this could still go higher because it's a brand new cycle. There's more at play here. So, I mean, big question mark. Is this going to print a higher low? This is just a question mark for me. Right now it's in favor of the bears by definition, just being in a trigger cell. But, we'll have to keep an eye on this one too. This is the true strength indicator. And this can indicate when you're more bullish than you are bearish. You can see here's August and September where we just briefly dipped below, and here we are approaching the trend line again. Now clearly we're in a bull trend, but we're also at some pretty high levels, right? These are levels for maybe a cause for concern that we're like at 73 point. Let's see, when are all the times on this indicator? Let's see if I can get a horizontal line in here and drag it down. that we got to these like really elevated levels. Sorry, I'm just trying to position this properly. Last time that we got this high was December 2020, right? And we fell below it. We actually did get above that line. We only briefly got above it in December of 2017. I'm trying to show you how significant these levels really are that we're at right now. December 13, April, we went all the way to the top. That hasn't happened since 2012. So pretty rare to get all the way to the top. Could this time be different? Could we come down and go back up to the top? Sure, it could happen. So I would just say this is really not a point for the bears or the bulls, yet. We have to see how it reacts. It does look like it's putting in a lower low, which is bearish by definition, but that doesn't mean anything. I mean, technically here, it put in a lower low in August just to curl right back up. I mean, it did cross under. So we'll have to see if this crosses the yellow line. If it does, I would actually like to see it cross, not for my portfolio, but if we get to $58,431, that will cross below the signal line. It would cross below the alert high at $50,000. So yeah, we'll just have to see what happens here. This is kind of a neutral with maybe leaning slightly bearish at the moment. So here I've turned on 3 moving averages. These are whole moving averages, which are a lot more current than the simple moving averages, which tend to be lagging. And we're bullish until proven otherwise. I mean, we are holding the 50 whole moving average. We haven't broken beneath it since July. We tested it, and it's good to test it, right? In a bull market, this is good to test. We tested the 50 in January, and now we tested it again in April, which we're still in April. And we almost tested it last week, but we have this indecisive candle. So we'll have to see what becomes of that. But now we haven't tested the 100 in quite a while. Like the 100 held throughout August, September timeframe really beautifully. And we had that bullish crossover in January of 2023. This is why I love the whole moving average. It can tell you like when a bear market is pretty much over and a bull market begins. And notice that the 50 and the 100 are getting further and further apart. The 200 is turned up. So I imagine if I pulled the 20 whole moving average up, we'd see that it's been breached, but that's okay. We can breach a 20. I worry more about the 50 and 100, but even testing the 100 is fine early on. And as our bull market comes to an end, we would expect to see behavior where we fall through both of these. As you can see, like in 2021, we went all the way down to the 200, but we held it, right? Not very well. I mean, it looked like this was the end right here. And I remember going through this and thinking, oh man, shit, this is over. But we ended up, bouncing, holding the 200, and then only to slice through in the end, right? Because you can see everything's getting concave down. This is a death cross, and a death cross with a whole moving average actually does take on some meaning. With a simple moving average, it's not necessarily as meaningful. And then you had a death cross here of the 100 with the 200. You're really, it's time to get out of the market, right? Like at that point, because everything's gonna be just turned down until you got this cross right here in December. And so I would suggest you guys play with whole moving averages. They can tell you a lot, and I like them better than SMAs in a lot of ways. But I don't want to downplay the SMA either. So let me throw that up here. I'll throw an SMA ribbon. Look, the SMA look even better. I like that the whole moving average can kind of tell you a little bit more current information, because you see how these didn't really start to unwind until October in a meaningful way. Whereas the whole was unwinding a lot sooner than that. But what I really love is we're above the 20, we're above the 50, we're above the 200, and we're above the 100. Now the 100 is not stacked above the 200 yet, but it is heading that way. And I can tell you, once they're all stacked above each other, which is again lagging data, you're usually in a parabolic run. So while we may have some short-term, downside that could potentially take us into this red zone, I have to tell you, looking at it from the perspective of a 20-week SMA that we have been above since October, I think it's kind of unlikely that my original prediction would come true of 45 to 50K. And I'm just looking at simple moving averages here. Nothing profound, right? That would take quite a bit of bearish momentum to get us down here and some pretty significant down wicks. Not impossible, but honestly, this is very bullish. The MVRV Z-score is kind of neutral right now, but overall very bullish. As you can see, when yellow is below blue, that tends to be, so this is your Z-score and this is your MVRV. This is generally a more bearish time. This is decreasing bearishness. We got briefly above it, but we've come below it now. Or I mean, almost like they're almost exactly the same. In the past, when you get to this point, this is usually getting very close to a parabolic breakout. Okay, so it doesn't have to be like that, but that's just kind of what the odds are, is that it probably is going to be a parabolic breakout coming. I can't tell you exactly when that's going to come. But in the past, you can see that when the MVRV Z-score gets above the MVRV, that's generally when you enter into the final stages of your bull market. And that final stage can last over a year. So it can last a really long time. But we may have to do some more chopping here first. But if anything, this just shows me that maybe we're a lot earlier in this bull market than I might otherwise realize. And we have to at least consider that the idea of a left translated cycle may not play out, and we could actually go a lot higher and for longer than a lot of people are thinking. You know, we do need to be open-minded to that idea. MVRV Z-score, the SMA's ribbons, even the HMA ribbons are all pointing towards a lot of bullishness. And honestly, all my indicators are pointing towards that, like over like a medium to longer term. It's just the question is what happens in the short term. And I guess the answer is, I guess it doesn't really matter, right? If Bitcoin dips and you believe we're in a bull market, it's just a buying opportunity and just to head higher. So I've seen enough to think that we're very bullish overall, right? There could be some downside. We could see a little dip. It's possible. We could move down for a few weeks. It wouldn't change the bullish structure of this market. Or we could do what we've done in the past, which is just maybe have a few bearish weeks, you know, close April red, which is our first red month. I would like to see April close red, because then we no longer have to say an 8th green month, right? We could have the month after that possibly be green. I think May is more likely to be a little bit red than green, but, you know, I'm open-minded. I think May will probably end up being slightly red, at least in the beginning. Hard to say how it will end up. Doesn't really matter. These are just months, right? Bitcoin doesn't care about months. It just does what it does. This trend is strong. Like, I remember I drew like a curve through here once, and I posted that. Let me do that again. Now, I drew this a while ago, and it seems like Bitcoin is, you know, you can go back to one of my previous videos to see it, and this isn't the best drawing, honestly, I just did right now. Maybe you want to lower this just a little bit. So maybe Bitcoin needs to flag just a little bit more down into lower 60s, you know, and then take off again, right? Just go parabolic and maybe go up to like 95K or higher, you know. Like, I made a price prediction of, what was it that I said? I said 75,000 to 85,000 by, I think I said sometime between August and December. Folks, I think that price prediction could be very easily invalidated. Forming like a cup and handle here on a longer time frame, other people have noticed that. And it's like, so if this thing does start to go really parabolic, first of all, it's going to need momentum to do that. Like, it's not going to just happen out of nowhere. What would that path look like? Is it going to be straight up and vertical? I don't think so. I don't think it would be like that. We have to really go far out, you know. Yeah, so eventually I think it would break out of this parabola anyways, but what is this? This is July of 2024. I don't see us going this high. No way. But I could see us maybe having another leg up on the parabola, and we can maybe test 100K. Maybe we fail there. I'm still going to keep my price prediction of 75 to 85K until it's invalidated. Okay, I'm not going to keep switching up predictions. Let's just leave it alone. If I'm wrong, I'm wrong. I haven't been proven wrong yet, but I could be proven wrong. And I think I will most likely be proven wrong on that. And that's okay. But yeah, so I don't know how long we're going to stay on this parabolic curve. Maybe we break it on the next time we go up and hobble around a little bit. And maybe that's a period of consolidation, and then we go up, you know, later in 2025 or something. So the reason I'm sort of heading in this with this direction is, like, I've had some people come into my group recently, some very intelligent people who say Bitcoin could get to $260,000 in 2025. And this is an idea that's not foreign to me. In fact, if you look on my TradingView profile, I'll actually pull it up here for you. Back in late 2023, I actually made a similar prediction for Bitcoin going to 200 and I think I said 270K in late 2025. But a lot of things have made me pivot on that. But it is worth revisiting, and I think we should take a look at it and at least consider that theory as a possibility. And one of the justifications is that we're forming a massive cup and handle, in this formation, and that we're about to break out of this in a huge way. And I will tell you, triple tops, this is technically like a triple top. These are rare. These are truly rare. A triple top usually turns into something bullish. It did with gold. Gold broke out, and so we may see a similar breakout of Bitcoin to the upside. So let me show you what I made a long time ago. So this is something I drew using the Bitcoin Liquid Index, and this was published on November 24th, 2023, and you can see I've been really wrong about exactly how this would play out. But at the time, I figured, Bitcoin would just kind of follow this long-term support and resistance idea. By the way, this idea is not a novel idea. There are plenty of analysts out there who have studied this idea. But I drew my own version of it, and this basically charts out how Bitcoin cycles tend to have their previous support ends up being resistance for the next cycle. And so this has been the case throughout every cycle, more or less. And now the question is, will this also hold true for this particular cycle? And if it did hold true in the way that it's held true in the past, that gives us an approximate top of around 260, 270,000, somewhere in there. So, we could call it 250 to 270 if we wanted to. And this would be, if it follows the same amount of time as it always has before, this would put the top out in October of 2025. Now, can Bitcoin get that high by October of 2025? And the answer is, through logarithmic regression, yes, it can. It can get that high. Will it, though, is the better question, right? We have to look at what it would take for Bitcoin to get that kind of boost to 250 to 270,000, because we're only at like 60 something thousand right now. It feels like we're building out some volume here, which could serve as a, who knows, maybe our next cycle low ends up being around 50 to 60K for the bear market. But that would be quite a drop from 250. I don't think it'll even get below 100K if it goes that high. I don't take this theory too seriously, but I am happy to consider it and say what would probably need to happen for it to play out. You would first of all have to see, well, here, let me show you instead of just talking. I love the HMAs. So you'd have to see the US dollar index not break out here at this 200. So this is a 200 week HMA. That is a strong area of resistance, and it's turning down. So if the dollar gets rejected here at the 106 level, the dollar does look strong. It does look strong, but overcoming the 200, that's going to be a tough task. The last time it was able to do that was June of 2021. Okay, so it has been a while, and then of course, these dips in the dollar on its way back up are where Bitcoin found, its double top. If the dollar gets rejected here, which is a big if, that is going to be great for risk markets. So, it's hard to say exactly what's going to happen. I don't think anybody knows. But, remember, the Dixie is basically a comparison of the dollar to a basket of other currencies that are also denominated in dollars. So we don't want to see this go up, right? If this goes up, that's bad for risk assets. What we hope for is that this is just a continuation of the bear market. We are in a red Gaussian channel. It's pretty neutral looking, so it's hard to say exactly what's going to happen. The Gaussian channel has been red now for just under a year. The last time it was red from 2020 it was red for quite a long time. So it's hard to say. The dollar on the weekly does tend to spend quite a bit of time in a red Gaussian channel, although it doesn't have to be super, super long. It does tend to run about a year or so. We haven't quite reached that point yet, and it can run even longer than that. So this looks like the dollar has a lot of resistance that it's facing. It's facing the top of the Gaussian channel. It's facing the 200 week HMA. Let's turn on some, where is it? I'm looking for it. Weighted Bollinger Band. Yeah, let's turn that on. To turn on the Bollinger Band, it's also at the top of that channel, so it looks bullish, but it's got a lot of resistance to play around with. So, well, I guess my point is, like, if we want to see Bitcoin be able to rally to 200 and something K, which seems like a really big ask, we need to see the dollar basically go into like a longer term bear market. We need to be like, all right, it chopped around, it consolidated, it's going to get rejected here, and then we just start heading down, risk assets start heading up. Well, what would cause that to happen? You know what chart looks a lot like the dollar? US oil prices. Imagine that. So US oil prices have just gotten rejected by the top of the red Gaussian channel, but they got above. You see this red right here? They got above the 200 week HMA, and in fact, if I turn these things off, let me turn off the Gaussian channel. Just, the HMAs can tell you a lot. They're all kind of converging together here. So the dollar's been, oil's been under its 200 week HMA since November of 2022. It tried to pop above it, got rejected in September. It got above it in March and has been above it ever since. So high oil prices are bad for the economy. And this is something we need to watch very closely. What happens when oil reaches the three of these HMAs together? I'm imagining there's going to be some kind of change, and maybe that change is it just gets rejected. This is like another kind of fake out. It comes down and does not hold the 200 as support, right? I can't tell you what's going to happen. Last time things got all scrunched up, this thing fell off a cliff, but that was that was during COVID. So, yeah, it could just go sideways too. So we need to see what's going to happen here as well. To have a strong risk on market, you're going to need oil prices to start to cool off, not to heat up. Now, the S&P and Bitcoin do decouple at times, although they do tend to have some high degree of correlation. Bitcoin is more closely correlated than the NASDAQ, but you can see the S&P is at a key area of support right now. It is at its 100-week HMA with the 200 looming below, but everything is nicely turned up. So this could be, the lows could be in for the S&P, and we can maybe start grinding higher, or maybe we have a more sustained correction down to the 200. Even if that happens, it still looks overall macro bullish. Recession probabilities index is very uneventful right now. It's at 1.5. So this is something we would want to continue to just chop around at low levels. We don't want to see it come above, and enter into these regions here. That is generally not a good thing, as you can tell from 2008, 2010. Yes, we had a very brief recession. If you want to get an idea of how Bitcoin would react in a recession, just look back to 2020. That's how it would react, most likely not well. So right now, it doesn't look like we're in any imminent danger of a recession. That's good. What we want to see is that the recession probability comes down and doesn't go up. I realized I've had Heikin-Ashi candles on this entire time. So I'll flip back and explain those. Useful candles to have, but this is more accurate of what the charts actually look like. So if you're like, hey, that looks a little different than my charts because I was using Heikin-Ashis. If I go back, I think, it's just what I have on my phone and what I have on my computer are two different settings. So let me put on the Heikin-Ashi candles so I can show you. They're down here. And this basically is giving you like momentum, price momentum. And you can see price momentum right now is leaning down, but this is not a decisive. These are indecisives. So the indecisive ones are not making for a very convincing trend. That can happen at the start of a downtrend. As you've seen in the past, you can start out with these indecisives and it can turn into an avalanche of downward pressure. But yeah, there's really not a lot in the charts to indicate that we're heading, we're going to drop like a rock anytime soon. It just says more downside pressure is possible, and we saw that with the Snapple RSI, right? Anyway, let's draw everything together and make a conclusion. So in conclusion, we looked at Bitcoin and looked at all kinds of indicators about it. It seems like Bitcoin may still encounter some short-term trouble. I expect April to close red, and maybe parts of May to also be slightly red. However, Bitcoin has been very resilient. The downwicks have been bought up very quickly, and we have not come anywhere near this red zone that I drew, which is an area of tremendous support at the moment. So, and we also drew out like a parabolic arc. We looked at some indicators like the HMAs and SMAs that showed Bitcoin still very bullish. And this cool off that we're having really doesn't look that different from ones we've had before. So I would have to say, in conclusion, that in the very short term, the odds are we go slightly sideways or down with, potentially one more shakeout. I have a hard time seeing us get into the red region after going through all those indicators. I'm not going to say it's impossible, but I'm just going to say it's probably somewhat unlikely that we get that far down. I think we could retest 59K or 60K. That seems pretty reasonable to me. And it seems like we're setting up for another move higher. Now, whether that comes in a couple months or that comes, later in May, early June, I don't know. I have no way of knowing that. All I can do is go off probabilities. Some indicators are still a little hot, like the stochastic oscillator, but it can stay hot, as you've seen. It can stay hot for a while. Snapple RSI has cooled off considerably. It does have a little bit of bullish divergence, but it didn't look very convincing. So that's why I'm saying I think there could still be some downward price action to take us kind of through the next few weeks. But overall, I'm quite bullish on Bitcoin going forward, and I think there's a high probability that we get another parabolic leg up. Now, concerning the possibility of a $260,000 to $270,000 Bitcoin, for that to happen, the earliest that I could see it happening is in late 2025. If Bitcoin were to go parabolic now, I don't even think it would necessarily break 100K. I mean, it could test 100K, but I have a hard time seeing it get too far over 100K. I think there's a high probability that my 75 to 85K price prediction ends up being wrong. So, and I think there's actually an increasing probability that my prediction of a left translated cycle is also wrong, and that this cycle could actually extend into 2025. A lot will depend on macroeconomic factors, but honestly, nothing in the economy looks that bad right now. There are sectors that look not so great, credit, consumer credit is out of control, auto sales are down, so there are some indicators that are coming in kind of red, but then there's also some really green indicators like manufacturing has been doing really well. Initial claims was down. Unemployment is still only at 3.8%, so there's enough data to say things are okay right now from an economic data standpoint. Some things are heading in the wrong direction, inflation being one of those things, coming in at 3.5%, which is probably one of the biggest concerns. And some things are heading in the right direction. In some sectors, employment seems to be doing a lot better than it was in the past couple of years. So in conclusion, I don't think we're in a recession right now, and I don't think we'll be in one anytime real soon. And I'm starting to even doubt that we might even be in one at the end of this year. And this is really the first time I'm having those doubts. But I always go by what the data says. And if the data is not coming in super bearish, then why should I be super bearish? So there are some theories that maybe we don't get a recession until 2026. And wouldn't it just be so poetic if this cycle extended all the way through late 2025 and we get this crazy blow off top? I don't know that that's the most likely scenario, and I'm not going to pivot my stance right now. But if and when my price prediction of 75 to 85K is invalidated, I'll have to make a new one, right? I'll have to look at where we are, and I'll have to chart something out, say, hey guys, you know what, I was wrong. And I think if we blast through that target zone and we head a little bit higher, and we don't do it too soon, that's the thing. We can't do it too soon because then we overheat everything again. When you get super overheated, that's not good. So I'm hoping that we can kind of crab around and not do a whole lot of anything, maybe slow bleed down into the upper 50s or something. And maybe during that time, or even just crab up a little and just kind of crab, during that time maybe altcoins can run. And they can go on a little altcoin season. Altcoins look like they're ready to. They're like, hey, let's break out, we're ready to run. That's kind of what I'm hoping for. And I think there's enough data to suggest that is a possibility to come fairly soon. So I feel like I'm bullish on Bitcoin. I think we're very much still in a bull market. I can see the argument for a cup and handle that has formed. I can see the argument for extreme bullishness heading into the end of the year or later in the year. I feel like I'm with you on that. Like, I don't see anything in the charts that's like very bearish. I just see some indicators that need some time to cool off, and we're cooling off. We've been cooling off for several weeks now, and we may continue to cool off, and that would be healthy and good. We need to see the risk levels kind of reset so we can get that juice for another leg up, and these cool off periods can be really good for altcoins too, or we could get that leg up and then altcoins run. Now, I did point out that dominance does look bullish, but honestly, there's some indicators that show, and I'm not going to do a deep dive into dominance on this video, but there are some indications that show dominance is weakening too, right? There's some indicators that show that dominance is more likely to be in a bear market sooner than probably anything else. So, and you might say, well, we're in a high interest rate environment right now. Where's all this liquidity going to come from to pump Bitcoin? And my answer to you would be, okay, we're not going to see the kind of liquidity come into this space like right now with interest rates so high at 5.25% that we saw during 2020 or previous cycles where we had like nearly zero interest rates. I mean, even then we had nearly zero interest rates. But we're going to see liquidity still flow. Liquidity will come from somewhere, right? This is a global market. So I'm not too concerned about that. I think that the interest rates and some of the issues in the economy could hold people back a little bit, but it could also incentivize them. Think about it this way. Interest rates are high. People are feeling squeezed. Let's go make some money in crypto, right? So I think that's an oversimplistic argument to say high interest rates are going to prevent people from investing. In general, yeah, some of that is true, but people don't always act rationally with their money. So, all right, well, thank you for joining me in another crypto simulation video. I hope to see you in the snake pit. Be sure to join that. Link will be in the video description, and I'll see you there. Otherwise, like, comment, subscribe, and set notifications to be notified of future videos. And if there's anything else you'd like me to talk about, let me know in the comments. If you disagree with what I've said, something's not clear, let me know in the comments, or let me know directly in Telegram. Kind of live in Telegram most of the time. So, yeah.